Hello and welcome to myfinanceteacher.org. Let's have a look at three assets today. So that's a bit of a general market overview. We're going to look at cryptocurrencies, we're going to look at energy, crude oil in particular, and we're looking at precious metals, gold in particular. Let's start with cryptocurrencies. The last time I looked at cryptos together with you guys on YouTube was on 20th of November. That was all the way up here after a couple of weeks of a downward momentum in Bitcoin after a recent high on the 10th of November. Back then I mentioned that the decline into the cycle low in Bitcoin was likely to continue, as these cycles usually last for around a couple of months. And I drew this black V shape over here indicating that the cycle low perhaps is going to come somewhere in late November. And as you see, Bitcoin price came relatively close to following this black shape over here. Let me move the bottom up to 28th of November, as we have likely seen the bottom in the ongoing Bitcoin cycle yesterday, as the low on the 28th of November was just a little bit low that low recently on the 26th of November. Back over a week ago on the 20th of November, we still hadn't seen the decline into the cycle low retest this 50% Fibonacci retracement. By now, over the last few days, Bitcoin has finished retracing at least a 50% or more of Fibonacci retracement. That is a good sign. That is one of the signs I had been waiting for in expectation of a cycle low. And another sign that I mentioned in that video over a week ago is that I would like to see the decline into the cycle low on Bitcoin to retest the previous cycle high. That's somewhere around $53,000. And yeah, Bitcoin kind of came close to doing that within a couple of $100 or so. Additionally, we've seen a couple of pokes, perhaps a third poke over here, perhaps not, below the relatively wide Bollinger Band, so that might be enough for a cycle low. Of course, nobody does know the future, and the cycle decline might continue further into this next support zone, somewhere around $49,000. But based on what Bitcoin had done in the past, after all, although history doesn't repeat itself, it does tend to rhyme. Bitcoin has usually followed these 2-month cycles, and the ongoing cycle, if we have seen the low yesterday, ongoing cycle has been going on for 68 days. That, I think, is close enough to an average duration, and perhaps that's enough of a decline into the cycle low. But of course, sometimes these cycles do stretch, lasting for quite a while, as this one in early 2020, for example, lasting for nearly 3 months or so. But I don't think the scenario where Bitcoin drops back below the $53,000 is very likely. I would probably only give it a 25 to 30% chance that this cycle is going to stretch, bringing us significantly lower prices on Bitcoin. And the rest of perhaps 70 to 75% chance I would allocate to the scenario where we are about to rally into the new cycle in Bitcoin. After all, looking at the Crypto Fear and Greed Index, again, last time on the 20th of November, Crypto Fear and Greed Index hadn't dropped all the way down to 30, and our observation was that usually these cycle lows bring this Fear and Greed Index at least a little bit below 30. So our expectation was to continue waiting for a cycle low until we see this Fear and Greed Index under 30. And as you see, a couple of days ago, this Fear and Greed Index actually touched 21. So that's well below 30, which is again likely enough for an ongoing cycle low. So in summary about cryptos, I think the pain since mid-November in cryptos has finished, and perhaps the better times are coming over the next few weeks as the new cycle rally is going to unravel. So if you would like to see Bitcoin above $60,000 over the next 1 or 2 weeks, you know what you gotta do. You gotta hit that like button and share this video with your friends. And in the meantime, let's move on to energy, crude oil in particular. And last time we talked about crude oil over the last few days with the members at myfinanceteacher.org. I mentioned that I was afraid that crude oil had topped kind of early within the ongoing intermediate cycle, and perhaps the decline into the cycle low had already started. We see a bit of a confirmation of that with this huge red candle on the 26th of November. So yes, crude oil is dropping into that cycle low. Looking at history, at least since mid-2017, these crude oil cycles on average lasted for around 169 days, but looking at slightly longer history, as far as I remember, these crude oil cycles last for around half a year or so. I think with this significant drop in crude oil, perhaps the rest of the decline is not going to be extremely severe, and perhaps this ongoing cycle might turn out to be a relatively short one. That's partly because the 14-day RSI on crude oil is already dipping into oversold, which we haven't seen all the way back since September 2020. And a more significant drop into oversold levels on the RSI in crude oil was all the way back in this very painful pandemic crash. Yes, there are some fears of health concerns going on right now, but I think crude oil has stretched a little bit too far on the low side. So maybe a bit of a sideways to down move over the next just a few days, perhaps giving us a cycle low for a relatively short cycle before the next push higher into winter. That's partly also because, as I mentioned to the members at myfinancesteacher.org, although a lot of countries, including the US, have threatened to start using some of their strategic reserves, if you actually look at the data, the level of petroleum products in those strategic reserves, at least in the US, is the lowest it has been over the last many years, perhaps around a decade or so. I don't remember the particular data right now, but I have reported on all of that to the members at myfinancesteacher.org within 1 or 2 weeks ago. Additionally, this week we have a meeting of OPEC members, and with this decline in crude oil being so severe, it's highly likely that OPEC is going to reconsider any increases in production of crude oil. And if that happens, that is also going to help sustain crude oil prices, even in the face of these new health concerns coming from Africa, as it looks like at the moment. So if we see another sideways to down move for just a short while, perhaps a relatively short cycle lasting maybe for like 4 months or so, instead of an average 5 to 6 months. If that happens, maybe over the next several weeks, we might see a bit of a positive divergence on the 14-day RSI, as if there are no significant moves down in price, if it's only going sideways to down, RSI will tend to recover somewhat. And that's usually when the positive divergence takes place. Next, it's very important to look at market sentiments. So let's have a look at Optimism Index on crude oil. But before that, a bit of a plug-in. Let me first welcome you at myfinancesteacher.org, which is a community of like-minded investors where I make regular updates on a range of markets, including precious metals, cryptocurrencies, stock market indices, energy, including uranium and fossil energy, as well as commodities such as copper, grains, and others. One of the interesting products in the community is the model portfolio, which is transparent, showing all of the history of my trades starting in July 2020, with the total gains without any leverage, so that's without taking too much risk, is around 55% between July 2020 and October 2021. With a 2x leverage, one perhaps could double the portfolio size in the same period. So if you want to see what's going on in the investment community, you are more than welcome to register. So here's the crude oil optimism index, and we see that it has already came down all the way to 54 as it closed on Friday. Crude oil is green today, so perhaps there will be a bit of a recovery today on Monday. And although looking back at history, the intermediate cycle lows in crude oil do tend to come when this optimism index is close to around 30 or so. Over the last couple of intermediate cycles, this optimism index only dipped to around 47 during these intermediate cycle lows. And while this index is currently at 54, as I mentioned, perhaps there isn't much of a downward momentum left in crude oil before we see the next bounce into the intermediate cycle rally. Unless, of course, the world comes to a stop again with a lot of travel restrictions. But on the other hand, perhaps people are getting a little bit tired of some of those restrictions, So perhaps pushing for too much harshness on those travel restrictions might be a little bit difficult politically, which again might prevent crude oil from just dropping out of bed even more from here. And lastly, let's have a look at gold. Last time we looked at gold, we saw this black squiggly line as our expectation of what might happen to gold over the next several weeks. Again, so far gold is kind of following this black line, perhaps not with actual levels of correction, but at least with a bit of a timing of that. Let me adjust this black line a little bit. And what I think we are observing is a daily cycle low on gold. There is a pretty good chance we've seen the cycle low over here on the 24th of November, giving us a cycle lasting for 56 days. I would give that perhaps a 50% chance. There's another 50% chance that gold continues down for just another couple of days. But in either case, I think we are pretty close to a daily cycle low in gold, and a bit of a rally into the next short-term daily cycle is upcoming really soon over the next couple of weeks. But as gold rallies into that third short-term daily cycle within the ongoing intermediate cycle, in that couple of weeks' time, the intermediate cycle will already be around 4.5 months old or so, and usually these cycles last for around half a year. So that will be a pretty old intermediate cycle, meaning that perhaps, as I mentioned many times in my previous videos, again, the gains in the ongoing intermediate cycle aren't going to be very exciting. As I mentioned, perhaps it's going to be more of a meh cycle where, again, gold is just going sideways to down. So after this relief rally over the next 2 to 3 weeks, I think another correction down into the intermediate cycle low is upcoming. That's strongly based on the usual cycle duration, which is around half a year for gold. And lastly, let's have a look at this Optimism index on gold. Clearly, the Optimism index over the last few days dropped from under 30 to under 60 with this decline into the short-term daily cycle low. A bit of a bounce perhaps to bring this Optimism index back above 60 into the last short-term cycle top of the ongoing intermediate cycle before perhaps pushing more traders into a bit of a misery when this proverbial blood is on the streets. When the correction down into the intermediate cycle will likely bring this Optimism index again back below 50, and that will be the time to increase your allocation to precious metals. So that's my general expectation on cryptos, energy, and precious metals. If you want more details, you're always welcome to join us at myfinancesteacher.org. And why not subscribe to the channel so that you don't miss any of our content. Have a productive Monday and good luck in your trades.